Good evening, everyone. Time for another silver update. This is the 30-minute chart of silver, and it's provided by netdandia.com. You can click on the link below. You can see we are still testing this primary downtrend line. We touched up and failed, and we're starting to rally now. The other lines I've drawn in are the MACD trend lines, and you can see that the MACD is actually rising while the price is falling. We're trying to make a challenge up above the zero line here, and we'll see if this rally can break through this primary downtrend line. That will probably signal a reversal of this current trend, but we're waiting to see if that's going to be the case. The other line here is the low that we made, and that's about at the 3160 level, and we bottomed here at about 3180. So we want to see if we come up to this line, turn back down again, or if we actually break through above this line. So we're coming towards a resolution of this trend one way or the other. If we go down, obviously you're going to see a very serious stacking opportunity. If we go up, then we may have put in a bottom. Now, the other chart I want to look at is the oil chart. We had a very strong move in the last couple of days. You can see we touched up above 108.50. We've fallen back just today, and we've touched all the way down to about 105.75. So oil is falling off, and we're still waiting for a resolution of the inflation picture. The gold chart is very similar to the silver chart. With the gold chart, you can actually draw the downtrend line from the top that we made, and you can see we ticked up just above and then failed below, and then we had a test tick, and just tonight we're rallying up above this downtrend line. So this may portend a reversal in the gold chart. We'll have to wait and see what happens. Now, the main story of the night, I want to take you over to Silver Doctors. This is a story that Silver Doctors has been breaking a lot of stories lately, the JPM whistleblower, and this story is a story from AGXIIK. I assume it's a guest on Silver Doctor's blog, and there's some very important points here I want to go over about accumulating physical silver. So let's read this. Will the cartel soon set its sights on China and India's silver? Historically, any individual investor who has accumulated over 100 million ounces of silver has been forced to liquidate their silver position by the cartel. See Hunt Brothers and Warren Buffett. With India and China accumulating nearly 1/4 billion ounces annually in 2011 and on pace to repeat this in 2012, how long can the cartel afford to let such silver accumulation continue? It is pretty clear the financial wars are engaged. We are at war with Iran and by proxy with China, India, Japan, and Russia, to name a few, who have vital interests in Iranian oil and sovereignty. Jim Sinclair notes that just because someone occupies a desk in D.C. does not make them aware of the extent of their actions and the repercussions of those actions. Attacking Iran financially is tantamount to lobbing bombs. With bombs, the damage is confined to a small geographical area. By excluding Iran from SWIFT, we've set off a 10 megaton H-bomb in the world's capital center. I woke up this AM with some numbers running through my head that may or may not have much to do with Iran, but I can't help but think they are related. The transfer of thousands of tons of gold from west to east must seem like bank robbery to some, particularly the Fed, which is acutely aware of the wealth transfer. China is divesting itself of U.S. treasuries, as is Russia. Russian holdings are half of what they were a couple of years ago. Japan has some real problems with trade and budget deficits, so their U.S. Treasury holdings will be shaken up. We're trying to force India a weak hand in the world of fiat and PM to do our bidding and stop buying oil from Iran. We can't force China to stop buying Iranian oil, and we're not ready to lower the boom on Japan just yet, since they, as an ally of ours, are too strategically important for now. But what really struck my interest was a particular number that seems to keep cropping up. That number is the total holdings of silver by one person or institution, and what happens when those holdings hit a certain number. It may or may not be related to war, actual or financial, but it does seem to have parallels given the reaction by banks and governments when a certain level of silver holdings hits the radar. When the Hunt brothers leveraged ownership of silver went above the 100 million ounce, their world crashed down around them, forcing them into bankruptcy. This attempt to corner the market aroused some powerful interests going all the way to the White House. Silver was into the doghouse for 20 years until Warren Buffett recognized the value of this metal and quickly acquired 129 million ounces. He foresaw shortages in silver as well as its usefulness. The price of silver was just over $5 an ounce and was just too tempting. JP Morgan helped him to acquire this stack. They were later prosecuted for this on the chance they were trying to manipulate the market. Warren saw value and bought as much as he could, but, according to rumor, was forced to sell his holdings in order to be bailed out of AIG. The stack was reportedly used to fund the first U.S. silver ETF, the SLV. The SLV now holds 350 million ounces of silver and is a target of speculation that their vaults have been stripped of silver. Those shorting the stock seem to smell blood in the water. SLV has become another major silver holder in the gun sights of powerful interests. Much has been written about Eric Sprott and PSLV, but his silver holdings may not yet be the magic number of 100 million ounces. But if you count CEF's holdings, these two ETFs are now above 100 million ounces, so we will see what happens there. I imagine some people may not sleep well at night with that knowledge. And then there's the COMEX with its 133 million ounces. Nothing to see there. Move along. COMEX sits at ground zero in the silver wars. It's just a matter of time until the COMEX holdings are taken. How that will happen, calls for delivery comes to mind. It will happen possibly for no other reason than the corruption in this system. All of these institutions and individuals shared one thing. They all held or currently at least 100 million ounces of silver. It seems to me to be a magic number where the baleful gaze of powerful interests take notice, which leads me to the next thought. China and India each acquired about 110 million ounces of silver in 2011, are on pace to acquire a similar amount in 2012. Given the strategic value of silver and China's attempt to corner the world supply of rare earths, silver being one of them due to lack of supply, these numbers must be arousing interest worldwide. The total annual world silver production is somewhere around 1,000 million ounces. 25% of the world supply of silver is being absorbed into the hands of individual buyers as well as central banks and industrial facilities in China and India. This will not go unnoticed, but unlike the ease with which individual silver stacks are taken, it will be several orders of magnitude more difficult to take silver from sovereigns. If the purchases of gold by China at 770 tons and India at 900 tons plus this year, like bank robbery in the eyes of the Western powers, I wonder how the acquisition of 25% of the world silver supply will be viewed by our central bank. Double parking, jaywalking? I think not. If for no other reason that silver more than gold arouses passions well beyond its monetary value, someone will be held accountable as silver disappears into the eastern vortex. While this seems to be a small part of the story, I expect that it will become much larger as the silver shortage I predicted a couple of weeks ago becomes more noticeable. It's no accident that Eastern countries are quietly creating a stranglehold on this most vital of precious metals, as the sanctions being proposed to punish India for buying Iranian oil with gold become more commonplace, and as our central government foolishly targets more and more groups with misguided sanctions, this silver story might be seen as a pivotal battle in the coming financial and physical wars. So, excellent article. This goes over a number of points that I've gone over in my Office series about the comment that's made by the key character in those, that silver needs to go up to go up. So if you just think about the raw numbers with silver trading at about $35 an ounce, give or take. It's actually $32.20 right now, but we'll just call it 35. If you're looking at $35 an ounce silver, then 100 million ounces of that is going to be, and let's bring out the calculator here, is 35 times 100 million, and that's only $3.5 billion. So when you think about the scheme of things as far as the debt situation that we have going, $3.5 billion is just a pittance. It's a tiny amount. It's an amount of debt interest accumulated on a daily basis. So really we need to multiply times 10 to get some kind of decent amount, and that's $35 billion, and that's still just a tiny amount. So really, when you're talking about 100 million ounces, for that to be a significant amount of money, you're going to have to multiply by 100, and that's times 10 again, and that's going to be $350 billion. So for the 100 million ounces to really even matter at this point, the price of silver needs to be 10 to 100-fold what it is right now. So the question is, why is it that the players who try to accumulate these large amounts of silver relative to the amount mined, say 100 million ounces or roughly 10%, are continuously prevented from accumulating these amounts? And I think the answer is going to be clear, that if they are allowed to accumulate these amounts of silver, then the cartel is going to be broken. So silver needs to go much, much higher in price, at least tenfold from where it is right now, for the big players, say the pension funds, the sovereign wealth funds, and the others who have big money to invest, to even get involved. If they tried to get involved right now at the price that silver's at and the supply that silver's at, you would see such an explosion in the price of silver that really no one could get in that door. So silver really needs to go much higher for the big players to get involved, and you can look at my Office series if you want to examine those statistics. Now I want to take you over to the I want to do APMEX tonight, and I'm going to look at some of the semi-numismatic issues. The main thing I wanted to point out is that with this low silver price, although many don't consider 32 to 33 to be a low silver price, I consider it to be a very low silver price. I wanted to look at the Perth Mint series. We looked at what was available. There were some RCM issues available from Provident last night. I want to look at the Perth Mint tonight. So we'll go ahead and start with the Kookaburra series, and when you click on those, you can do 1 ounce 2012 and prior, and you can see that we start out with our 2012 1 ounce Kookaburra, and we're told it's a mintage of 500,000 coins. So a very, very small mintage, and you can see we're looking at 42.27. So we're looking at nearly $10 above spot, and the amount they have is only 289. So we want to go down to the 1 ounce 2011. You can see we're at $50 and only about 300 there. The 2010 is not going to be much better. That's not available. and as we go back, you can see the prices just rise. So with the Kookaburra, we really don't have a selection available. The next one we're going to look at for the Perth is the Koala. That's a big series that's been out every year since 2007. Now we do have this 2012 available. That's $36.81. That's a good $4 above spot, and we do have about 2,200 of those available. So that's one that is one of the semi-numismatics that's close. I like to buy them maybe $2 or $3 above spot. That one's about $4, so it's still a decent price above spot. The 2011 1 ounce, and you can see that one's at $42.31, so that one's kind of gone out of reach. The 2010 1 ounce, and you can see that one's up at 67 and 69. So the only one on the Koala series is going to be the most recent, that 2012, and it may be that this price of $36.81 is a very good price for this coin. I don't particularly like the artistic image on this coin, but then again, it's very well done. It's not something I like as far as the drawing, but the artistic style and everything else is really good. So it may turn out to be a very good semi-numismatic play. So let's go over and look at the Lunar Series. You have Lunar Series 1 and Lunar Series 2. Those are the other two key ones. The Lunar Series 2 is the one that has the dragon and has the tiger. You can see when we get down to the 1 ounce dragon that we're looking at for the 1 ounce $79.99, and they have about 8,000 of those. So they have quite a few of those. It's very, very overpriced. I've never seen this coin anywhere near spot ever since it came out. I guess the demand was so high for this coin, they just never even decided to release it at a low price. So that's a very high price on that coin. The half ounce, you can see, is $23.16. That's actually a much better price per ounce of silver. That's coming in at about $46 an ounce. So if you're interested in gambling, you might want to try to pick up some of those half ounce Year of the Dragon coins. If we go to the next year, you've got the Tiger, and the 1 ounce Tiger is up here at $99. So there really aren't too many Lunar Series 2 available at low prices. Now the Lunar Series 1 is probably going to be worse. You've got just through 99 through 2010, so that one's been discontinued, and you're not going to get the Tiger for anything cheap, and the others are older coins. So that's the Perth Mint offerings, and they're very sparse. I would definitely have to say that the two best buys I saw there for people who want to chase down the numismatics would be that latest Koala, and then we've got that Lunar Series half ounce dragon that comes in at about 23 for the half ounce. So those would be the two best buys I've seen there. The main point is that the pickings are very thin, and we see the same thing we've seen for many years, that there seems to be a shortage, and no one can seem to account for that shortage. If silver were fairly priced, then obviously there wouldn't be a shortage, because it would be in their interest to sell as much as they can to make as much profit as they can, but that's clearly not the case. So with the silver price, we're looking to see if we can rally above this downtrend line we've drawn, and if we can, we may start to rally and move towards that 35 price, ultimately that 37.50 price where the major smackdown occurred with the Bernanke speech. But otherwise, we're just looking for opportunities to stack. And we'll talk to you next time.